Good morning and welcome to the trade setup right here on BloombergQuint Live. It's Friday morning. I'm Neeraj Shah, and it's a busy day for us in India, right? Because there's that RBI policy as well that comes out at 10 a.m. So we would be waiting with bated breath for the commentary that comes in from the Reserve Bank of India and the questions and the responses to the growth numbers, etc. That all come in as well. Add to that the HDFC Bank thing that they've done. So lots to talk about today. But first, the world, how the world market's doing. So I think caught between hope and challenges around the vaccine, the world markets are waiting. I think that's the term to be used. The US markets yesterday were waiting. They've been doing that now for 2 days on a trot. But that's what they were doing. They were just waiting for some news to come out, and maybe if the news is positive, they'll move. But as of now, they're just waiting. Now, viewers, you would remember yesterday or day before, I pointed out this chart which was showing that the US Treasury yields are moving back or crawling back to the 1% mark. It shouldn't be taken as a bit of a disruptive move. This is the chart that I was talking about yesterday. Now, what happened incidentally was that there are a few people who started now talking about it, and I'll just take a minute out here to explain why this is important. So Mike Wilson, who is the Morgan Stanley CIO, yesterday in an interview with Bloomberg Television, mentioned, or he thought, that the market is overbought and it's probably a little bit overvalued, quite frankly, because interest rates are now finally starting to catch up. He said that the risk in the market now is that the 10-year yields finally start catching up and we have a valuation reset because stocks are a long duration asset, particularly the US stock market. Now, is this confusing? Then I'll try and explain why Mike Wilson is a bit concerned. And here's a small explainer from our end. What happens, viewers, typically is, and I'll try and bring it up for you as well, that the surging US yields, when the yields move up, amidst optimism about the economy opening up and things getting back on track, etc., because of stimulus program or a positive vaccine news, what happens is that if the yields are moving up, then a higher discount rate, because the yields have moved up and therefore the discount rate moves up, it may eventually require an adjustment lower in valuations. And particularly with stocks at all-time highs, this might come and bite a bit. Now, this is too soon to talk about, but Mike Wilson is an informed man. He's spent 30 years at Morgan Stanley. So I would trust his judgment when he's saying that this could be a bit of a problem. Now, again, that's what makes the market. There are enough and more people who say that this will not be a concern, but I'm just bringing out something that is now started to come in the realms of conversation for a lot of money managers. Let's wait and watch if this does have an impact. For now, though, it isn't. Markets are quiet across Asia as well. Kospi was up about 1.5% early morning trade. As you can see, the lower chart is Kospi, and that is trading high. But HSI about 0.25% lower. I think net markets, ASX was flat. I think net the markets are flattish. The SGX Nifty, when I checked early morning, was showing a downtick of about 0.12 or 0.2%. So nothing too dramatic from the SGX Nifty side as well. Now it's up about 0.28%. So nothing too dramatic from the SGX Nifty side. I reckon we could start in and around 0.25% higher or lower. And then if the RBI policy has some meaningful moves, then we might move accordingly. So I think that's the trade setup for today. Everything hinges around, in the near term, the very near term, for the first couple of hours, around the RBI decision. Yeah, I mean, Maruti Bharti Infratel moves show that good news is getting bought into, so that's a positive sign even for the large caps. But as I said, RBI decision to determine the near-term moves for the Nifty Bank and presumably the market. Yesterday, the interesting thing was that PSU Bank saw some traction and moved up on very high volumes without exception. Can Bank, PNB, BOB, SBI, all of them had some very good moves, so that's heartening to see. Also heartening to see the mid-cap activity, which is likely to continue, to my mind. The index has outperformed on each of the large 4 sessions. And I believe that the sector to watch today, naturally so BFSI because of the RBI policy, but dealer desks have suggested that watch out for specialty chemicals for the next few sessions. So maybe starting today or over the next few days, do keep an eye out on the specialty chemical stocks. They could be interesting movers too. What about the stocks to watch? It's a fairly long list, not too many heavy movers expected, but a few names that all of us should watch out for. I'll start off with Granules. Now, it's anyways in the news because people believe that there is a deal that is imminent out here, Carlyle or some other private equity firm. And that news keeps on moving around. BloombergQuint doesn't have confirmation of the same. But the other thing that happened is that US FDA has approved the NDA for some capsules for Granules India. Now they have 35 approvals from US FDA, 33 final and 2 tentative. The penicillamine capsules had modest sales for the last 12 months, but maybe this is a further shot in the arm for Granules India. So therefore, do watch out for this stock in the session today. Let's move on. The other stock to focus on is HDFC Bank. Yesterday ended 2% lower. ADR ended 2% lower because of the RBI strictures. Edelweiss comes out and says that they do not believe that this will have a meaningful impact. They believe the disruption will be short-lived, and it's an opportunity for HDFC Bank to accelerate the tech investments. It continues to remain amongst their top 2 sectoral picks. Matrimony.com is interesting because people are liking platform businesses. Let's face it, right? The valuations of IndiaMart, some of the InfoEdge businesses, etc., have all gone through the roof. Matrimony.com is a platform. And White Oak India Equity Fund has bought about 1.47 lakh shares at 721 per share. White Oak is a large fund, about a $2 billion AUM. Prashant Khimka is a very choosy man. If he's got out and bought a small stake in this, and I don't know the history, whether they have earlier stake or no, but if he's gone out and bought into Matrimony, then I reckon that there could be some method to the madness. The stock reacted duly, I think, on account of that. Let's wait and watch if indeed there is further traction in the session today. Nagarjuna Construction Company is the other one wherein Rakesh Jhunjhunwala's stake has seemingly moved up. Their family has increased the stake to 13.7 versus 12.14% as of September. So I'm not saying they've bought the stake yesterday. They may have bought it earlier as well, but they've released this declaration and it shows that the family owns more stake in NCC. Stock may react. I'm not telling go out and buy it because Rakesh Jhunjhunwala family increased the stake. I'm saying that if the stock reacts, then you know the reason why the stock would have reacted today. Vodafone Idea, and I bring this up for a particular reason. The company's lost some subscribers in the month of September. I think the numbers suggest that they've lost about 4.65 million subscribers in September. But I must bring this to the notice of our viewers that this information was known during the quarterly results. When you analyzing the quarterly numbers, basis on the numbers, you get to know that there are some losses that would have happened to this extent. So while the formal releases for September come out only in December, that's the nature of the release, but part of this data is known to the smart money. I spoke to 2 telecom analysts yesterday, and both of them said that this is not new information for them. So yes, the stock may react here and there, but remember that you should be careful if you're trading Vodafone Idea today on the basis of this information, because smart money knows about this ever since the October numbers came out. So keep that at the back of your mind. Burger King IPO is drawing some strong responses from the retail side, and therefore watch out for Westlife. But the only caveat is in the last 5 sessions, Westlife as a stock has moved up from 405 rupees to 439 rupees as of close yesterday, which is about 8% move already. So if you think that Burger King is getting a good response, therefore let me go out and buy Westlife, just keep in mind that the stock has run up a bit. It may run up more, of course, but yes, it has run up a bit in the last few sessions. So this is essentially the December chart. In November, 25th November se leke, it's actually moved up. So keep that at the back of your mind. Last but not the least, Burger King IPO itself, you should keep an eye out for that. Strong subscription, subscribed about 9.38 times. Retail portion subscribed 37 times. It's the last day today, viewers. If you believe you want to subscribe, then today's the day. A lot of brokerages have said that it's an IPO worth subscribing. So keep that in mind. And what stood out for us out here at BloombergQuint today on the trade setup is this wonderful chart that's coming on the Bloomberg terminal. And we'll bring that chart up. It shows how copper, because of plunging inventories, is actually moving higher. The stockpiles, as you can see, the blue line, have fallen quite considerably. They are near the lows that they have been, and as a result of which copper prices are moving higher. You do your inferences. Some of the stocks could materially benefit out of this. I can think of Hindustan Copper, to an extent Vedanta. So be mindful of all of those. But yeah, I thought it's important to bring out that while everybody talks about steel and the steel cycle, copper is not far behind. Be mindful of that. Thanks so much for tuning in to the trade setup today. Have a profitable day ahead.